Okay, good afternoon. I'm preparing this video just to assist some of you who did not attend the previous class. Okay, we did discuss on this question. It's the illustrative problem, Gagah Realty, unadjusted travel in 31st July 2018. This is a unadjusted prevalence. So you're given a list of accounts together with its balance figure. Okay, cash is given 3425. Okay. And then accounts receivable 7,000, supplies 1270, prepaid insurance 620, office equipment 51650. Okay, those are the debit side. Credit is the accumulated depreciation for office equipment 9,700, accounts payable 925, wages payable 0, unearned fees 1250. Unearned fees is a liability. Then we have Encik Tahir capital 29,000, Encik Tahir drawing 5,200, fees earned. Okay, this is a revenue 59125, wages expense 22415, depreciation expense 0, rent expense 4,200, utilities expense 2715, supplies expense 0, insurance expense 0, and miscellaneous expense 1505. Okay, total debit side is 100,000, total credit side 100,000. Okay, these are the unadjusted travels. Additionally, there are some extra information given. Okay, data needed to determine the year-end adjustment are as follows. So we are going to record the adjustment. So it's given here: supplies on hand on 31st July 2018 380, supplies on hand 380. Right. Okay, we're given also the insurance premium expired during the year 315. C, depreciation of equipment during the year 4950. So we have to record the depreciation expense 4590. Wages accrued but not paid. Okay, so we have to record the wages expense and also the wages payable. Accrued fees earned but not recorded at 31st July 2018 1,000 ringgit. So we have to record the fees earned and also we have to record the accrued fees earned but not recorded. Okay, fees earned mean we have to record the revenue as well as accounts receivable. F, unearned fees on 31st July 2018 750. Okay, So it's given here the unearned fees. The actual account is 750. So we have to do the adjustment. So for A, we have to locate the supplies account here. Okay. The unadjusted trial balance shows that supplies is 1270. Okay, and we're given additional information here that the supplies on hand is 380. Okay, so we have to do some calculation here, right? Okay, we have to do some calculation here, and I will show it in Excel. Okay, supplies account. To 70. Okay, so this is the unearned, not unearned, the unadjusted trial balance. Okay, and this is the supplies account. 380. So the difference is 890. Okay, what is this figure for? It is a supplies expense. Okay, right. B, insurance premium expired 315. Okay, let's look at the prepaid insurance. We have prepaid insurance 620. Prepaid insurance. To go. Okay, prepaid insurance ending. Mm-hmm. 315. Check 315. Correct. Okay, what is so the difference is 315. What is this figure? This is the insurance expense. Okay, so this is for B. C, depreciation. So we have to record depreciation. So this one is straightforward. Depreciation. Much 950. 1950. C. Let's see for D. Wages accrued but not paid 440. Wages accrued, meaning that we have to record the wages payable. 440. Okay. Alright. And we have accrued fees but not recorded accrued fees. Okay, we have to record the fees earned as well as accounts receivable. How much? 1,000. Finally, this the unearned fees. Unearned fees from registered trial balance. See, unearned fees we have here 1250. 1250. Unearned fees ending 750. Okay, we have to find the differences. 500. What is this? This is fees earned. So we have to record the fees earned.